Last week, the USD-JPY, EUR-JPY, AUD-JPY, and the 10-year JGB yield reached a convergence point. Congratulations to those who made a profit. Now let's take a fresh look at this week's forecasts. I will share the financial market forecast for this week from October 6th to 10th. Finally, Takaichi has been elected as the president of the Liberal Democratic Party. What impact will this political change have on the financial markets? This prediction is based on a statistical analysis of more than 200 weeks of data, covering 17 different financial markets including currencies, interest rates, and commodities. Let's take a look at the convergence points, or profit-taking targets, from October 6th to 10th this week. US dollar yen is 148 yen and 42 sen, euro yen is 173 yen and 83 sen, Australian dollar yen is 97 yen and 83 sen, Nikkei 225 is $43,322, Dow Jones is $45,889, Japan 10-year bond yield was 1.64%, gold is $3,653. In last week's analysis, contrary to the predictions of major media, we mentioned the possibility that Takaichi could emerge as the new LDP leader, and that's exactly what happened. Japan is now set to welcome its first female prime minister later this month. Ms. Takaichi is known for her proactive fiscal policies, and as a result, Japan's stock market is expected to rally at the start of the week, with the USD-JPY possibly testing the 149 level. The new administration is expected to maintain a close alignment with the US Republican Trump camp, but as the LDP holds only a minority in parliament, it remains to be seen whether Prime Minister Takaichi will have the political strength to push her agenda forward. In the short term, markets may see a celebration rally, higher stock prices and a yen weaker as investors welcome political stability. However, with the US economy slowing and the government shutdown issue unresolved, this may turn out to be a good selling opportunity for both Japanese equities and the dollar. As mentioned last week's forecast, Fed Chair Jerome Powell has openly stated that US stocks are overvalued, and the buffet indicator along with several bubble metrics are flashing warming signals. A correction in US equities could quickly spill over to Japan, pulling both the Nikkei and the USF-JPY lower. As a reminder, the impact of a US government shutdown will lead to a decline in GDP, stock prices, and US yields, ultimately weighing on the US dollar. There is even a risk of a border everything bubble collapse across asset classes. Investors should proceed with caution and discipline this week. Quick disclaimer: the projections presented here are derived from a statistical stability convergence model based on long-term market data. This analysis is for informational purpose only, and we accept no responsibility for any investment decisions based on this forecast. That's it for this week's market outlook. Thanks for watching and stay tuned for next week's market update.